Have you ever had an investment that you just wish you had gotten into? You saw it just really rise fast and you're like, I missed on that opportunity and you're wishing that you had gotten into it. That happens to everybody. And I believe right now that's happening to a lot of people. In fact, recently we've been getting calls on that, people feeling like, wow, I'm missing out. And it's kind of the FOMO, fear of missing out. The main point of this quick video is to really discuss how the fear of missing out could actually help you with your investment performance. And I want to explain how. First of all, I think what we have to understand is self-awareness is really important. You really have to know what you're experiencing when you have that FOMO feeling. And, when I start getting texts or emails or phone calls where people go, hey, what about this stock? It's gone up, and you look at the chart of the stocks that they're talking about, and they've already had massive runs. And, or somebody got out of the market at the low and then they're trying to get back in and they're like, man, I woulda, coulda, shoulda. That is FOMO. And what the best way to deal with FOMO is to actually have a process. And I'm going to just go over something really quickly that I found to be very, very helpful. The first thing you want to do that I find really helpful is just, look at what you wish you would have done, whatever it may be. Take a look at it and say, what was good about that investment idea? And what could I have known at that time that would have helped me know to get into it? And when you start asking that question, you'll realize that there was a lot of things that were unknown at that time. There's a huge difference between investing in hindsight, investing in real time. So asking yourself the question, what could I have known at that time? What did I miss out on that I could have known at that time? And once you start identifying those things, then you could say, why didn't I act? Why didn't I act on that? Then you'll really find out that you didn't act because you didn't know enough, right? But oftentimes what you'll find is that maybe you could have known something, and that is real gold. When you figure that out, then what you need to do, or what I like to do, is to actually change my process. Having a checklist is super important. And being able to go through and say, this was important, I could have known this at that time, and that's an important piece of information that I should add officially into my process. So having a checklist, and whenever you're dealing with finance, it's super important to have that. And I learned this concept from Strategic Coach. It's a coaching organization that has been really helpful for me. And they have this concept of an experience transformer. And the idea is you ask yourself, what could I have known? What experience did I have? And knowing what I know now, what would I do differently? And when you start asking your question that, and you start, asking that question, and you start answering those questions, you can really create a system of actions at that point and say, okay, these are the things that I need to put as a procedure into my results. So, having that FOMO feeling can actually create improved performance. We have these hindsight biases and other things. There's so many different biases we can have. But using that concept of an experience transformer where you're basically taking the things that happened and turning them into processes is really important. One of the things I wanted to mention is, I don't know if you've ever heard of this book. There's this book here. This is the 80-20 Principle, written by Richard Koch. I think I'm pronouncing that right, Koch. This is a great book because it really kind of outlines why checklists are so important. I highly recommend reading this book. I'll put a link in the blog post so you can have that link. And that's one of the things I really want to share with you. Having that checklist, going through this experience transformer, that really can help you. Because right now there's all these stocks that are breaking out. And here's a few tips that I found to be really helpful for us. First thing is that chasing stocks is higher risk than when you're using your process. So whenever you start chasing stocks that have already, gone way, way up past their base buy points, they've been going up for some time and it's obvious to everybody else, a lot of times you can get stuck with big drawdowns. You can have reversals in those. The second thing is you're always going to miss out on some investments, right? Because you have a limited amount of capital. We use this concept of risk units, and we only have a certain amount of risk units that we're going to apply, that we're going to put our capital at work on. And if we get in a situation where we're full, you're going to miss things. There's always going to be things that you can miss. And you have to remember what your goal is. This is really, really important. And this is something that I think that actually I learned this from Mark Minervini. who is also a great investor and trader. But the concept is, what you really want to do is you want to know that your goal is to have a good rate of return. It's not necessarily to pick bottoms or pick tops. You're always going to have coulda, woulda, shouldas. You just want to have a process that's going to allow you in real time to make money, because the thing is, you can only invest in the present. You can't invest in the past. In fact, if you think too much about the past, it's going to ruin your present way of thinking. And you can't think too far ahead in the future either. You really need to invest in the present, and that process that you do day in and day out, that really has a lot to do with how well you're going to do. So now that whole concept really does apply to planning as well. So another, when we're talking about checklist, one of the things I wanted to let you guys know is you can get a free copy of my book, The Financial Freedom Blueprint. You can get a free copy of this book by going to the link that I'm showing you on this video. And I will sign that book and send it to you. I'm really making a point to get this out to people, because in this book, there is a checklist in there. There's a step-by-step checklist. And if you miss any of these steps, you're likely to make mistakes in planning out how you invest your portfolio. So highly recommend it. It's a pretty quick read, and it's very, very full of information. It's not just a bunch of fluff. There's like real information you could use. Stuff like, should I pay my mortgage off? How do I pick my risk tolerance? What are the steps I need to do to put my data together to know how to invest? What's an investment policy? How I do this, put this together for myself? How to select an advisor if you're not using an advisor. There's a zillion different types of advisors. How do you know who's qualified, not qualified for me? Those types of things. So get a free copy of this. Check out this book, The 80-20 Principle. And if you're in business and you're an entrepreneur, you might consider looking at Strategic Coach too. I highly recommend their situation as well. So anyhow, be sure to subscribe to my blog. You can go on our website at wealthnetinvest.com and go up to the resources, and I'll put the link on this video as well. And you can sign up for our newsletter blog. And every time we post something, any information about the markets or anything else, you can get that in your inbox. So do that as well. Subscribe to our YouTube channel. Hope you guys are having a great day. Louis Llanes, WealthNet Investments signing off. Talk to you later.